Alright folks, you're welcome to our next video session on FX Papi Institute. So today we're going to be talking about market structure. We're going to be talking about the types of market structure, how to be able to identify a proper market structure. So folks, before we go on further in this video tutorial, I would like you to subscribe to my channel and turn on your notifications and share to your friends and family, because this video is really going to be insightful and informative. So please subscribe, like and share. Alright, what is market structure? Now I'm going to briefly explain what market structure is. Now, this is the study of market behavior. It is a critical skill that will allow you to use the right price action strategies in the right market condition. Now, folks, it's quite clear enough. Market structure is the study of the behavior of the market. Now, one thing many traders fail to realize is understanding market structure. When you understand market structure, it's a skill and you'll be able to use it to trade any market in the world, be it stocks, bond, commodities, any kind of market. So that is your market structure. You have to really understand the concept of market structure, because market structure is the market. If you can't understand market structure, then I'm not really sure you would go far in your trading. But not to worry, I'm going to explain in detail market structure. Now folks, there are types of market structure, and there are basically three types of market structure. Here are the three types of market structure. We have trending, ranging, and consolidation. Now I know most of you are familiar with these three terms, but I'm going to explain it to you in a more advanced and in a more institutional way. Trending. Now, the definition of most traders out there of a trending market, they just say it's a market that has a direction. Now, you really have to be specific about your definitions as a trader, because that's what's really important. Yes, of course, it has a direction, but what direction? Now, here's a trader's perspective of a trending market. A trending market is a market that has higher highs and higher lows in an uptrend, and also has lower highs and lower lows in a downtrend. Let me show you what I'm talking about. Now here's an example for the uptrend market. You can see here the market is progressing higher. Now look at the first higher low, look at the next higher high, look at the higher low, look at the next higher high. Now this is a bullish market. It creates higher highs and higher lows. Think of it as a step, as a staircase. Let me put it that way. Think of this as a staircase. As the market breaks new highs, it creates higher highs, and it comes back to that recent high, and then it turns it turns into a new higher low. Okay, now I'm still going to go to the charts to explain in details what um, a true trending market is. But for now, let me take you through the basic road on this presentation. Now, folks, here it is for a downtrend. As the market comes lower, it creates lower lows, lower highs, lower lows, and lower highs. It's also a progressive. It's also a progressive move. Okay, it's a progressive move. So this is an example of a downtrend. For the uptrend, we have higher lows, higher highs, higher lows, higher highs, and for the downtrend, we have lower lows, lower highs, lower lows, and lower highs. Now let's move to our next um, market structure. Now, in a layman's term, a ranging market is a market with no direction. That doesn't really make any sense. Now, a ranging market is a market that moves from horizontal support to horizontal resistance. That is, it bounces from support to resistance, and in some case, it's actually tradable. That's depending on your on your time frame. It's a ranging market can be tradable. If you're trading from the daily chart or the 4 hour chart, it's tradable because it bounces from support to resistance, resistance back to support, back and forth, back and forth. Here's an example. Now, I believe most of you are familiar with support and resistance. If you're not familiar with if you're not familiar with support and resistance, I suggest you go and watch my second video series, or you watch the first and the second video series to understand support and resistance. So now prices a ranging market. So folks, this is a ranging market. You see it move from resistance support. So that's how it's that's how it is. Now the highs there are your resistance, the lows there are your support. Now folks, as you can see, the resistance touches it touches the that particular level up to 3 times or more, and same thing for the support. Whenever you're watching the market and you notice moves like this, you notice a move like this whereby um a support a support has been approached so many times, and a resistance has also been approached many times. That is a range, but it has to be horizontally seen before you be able to identify it as a ranging market. Okay, now if the support is identified horizontally but the resistance is not identified horizontally, then that market is not considered as a a ranging market. It's just a regular chart. Now, vice versa for the support level too. If the support level is not identified horizontally but the resistance level is identified horizontally, then that is uh, not a ranging market. But once you have your horizontal resistance and your horizontal support, just like the way it is right here in this chart, then that is a ranging market. If you also look at the one below, you will see the resistance was approached 3 times, 1 2 3. The support too also 3 times, 1 2 3. Just look at it below and you'll see it. This is a ranging market, folks. This is a ranging market. So let's move to the next um, type of market structure. Consolidation. Now, this type of market structure is actually the market that has no direction, whereby it's on the charts. On the charts, you just see candles moving up and down, up and down, up and down. It has no direction. It's not ranging. You can't identify the horizontal support, neither the horizontal resistance. When you cannot identify the horizontal support nor the horizontal resistance, that is a consolidating market. Okay, that is a consolidating market, and this market has no direction. It's just there. It's just in one particular area. It's just there, trapped there. So but after a while of consolidation, the market always leads to a breakout. It always leads to a breakout. So, folks, we are going to go to the charts now. I'm going to show you examples on our types of market structure. So, I'll see you in the next slide. All right, folks. This is the Australian dollar versus the Japanese yen, and this is the pair we're going to be using for today. Now, folks, like I said earlier, understanding market structure is the key to comfortably calling yourself a forex trader. The real skill in forex is market structure. Once you can be able to identify your market structure, what kind of market structure, how that market structure is playing out, you would be able to trade any kind of market. Okay, now let's proceed. I said we have three types of market structure. We have the trending markets, and we have the um, ranging markets and the consolidating markets. Now, the trending market has two types. It has the uptrend and the downtrend. And the definition for a trending market is a market that has higher highs and higher lows in an uptrend and has lower lows and lower highs on a downtrend. Now, let's take a look at this chart right here. Let's let's gaze our eyes to this chart right here. Now, this is an uptrend, okay, and this is a very progressive uptrend. You can see that this is a very nice uptrend right here. This is a very beautiful uptrend. So in an uptrend, what we are looking for is higher highs and higher lows. Now, this is a higher high. This high right here, that's a higher high. And this is a higher low. Right there. This is a higher low. Now, we can still go further. All these zones, this is a higher high here. Then below it, this is a higher low. This is a higher high. This high over here. And then this is a higher low. This is a higher high. This is a higher low. And it keeps going and so on and so forth. Now folks, Each time a high is broken, each time that high is broken, now please, we shouldn't forget, okay, we shouldn't forget, highs are resistance and lows are support. Now once the market breaks a new high, once a market breaks an old high, once it breaks an old high, it tends to come back there, come back to later on to that high to turn support, or let's say to turn into a higher low. Okay, after it breaks this high, you see it coming back. It breaks this high right here, it came back. Okay, now for a market to keep creating higher highs and higher lows, it should break the most recent high. It should keep breaking highs, recent highs. It should keep breaking highs. Once it breaks the highs, it will come back to retest those highs. Okay, now I'm not going to go into much detail in this video because I want to be brief. I want to be really brief here. Now, on an uptrend market, you have your higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. As long as the market keeps breaking all the old highs and keeps bringing up new highs, it's an uptrend. It's an uptrend. Okay, now if we keep going further, okay, okay. Now let me just use this opportunity to explain a consolidating market. I'm really going to digress a little. Now, like I said, a consolidating market is a market that actually has no direction at all. You cannot be able to spot your horizontal resistance nor your horizontal support. Guys, this zone right here, this zone right here, this is a consolidating market. Right here is a consolidating market because we are not able to spot our horizontal highs and horizontal lows, which is your horizontal resistance and your horizontal support. But if you are able to spot out your horizontal resistance and your horizontal support, then that market is a ranging market. But here, this is not a ranging market, this is just a consolidating market. As you can see, it's a consolidating market. Now let's progress further. Alright, now folks, the market from this zone, from after that consolidation, shifted into a bearish structure. And on that bearish structure, this is what we have. We have our lower highs, this high, this high here, this is our lower high, and we have our lower lows right here. That's our lower low. That's our lower low. Now folks, like I said, price, as long as price breaks new price as long as price breaks uh old lows and keep forming new lows, that is a bearish market. Okay, now we were bullish all the way from here, and then later the market started consolidating from here. Okay, this consolidation actually started from here because okay, yeah, no, this is where the consolidation actually started, because from here the market was bullish. This is a higher high, this is a higher low, this is a higher high, a higher low, and then this, it formed the higher high. but it could not make a proper higher low. It started consolidating, and then later the price now broke these lows here, these higher lows. Now this low right here is our new lower low, and then this high right here is our higher is our new lower high. And as it keeps breaking lows, it will form lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now as long as the market continues in this form, we are bearish. Now let's see how far this market went. Let's see if there was a change. Okay. All right. Well, folks, I believe with this example I have given to you, you now understand your market structure. Now, like I said, I'm going to be really brief with today's video session. Okay. Now, next week Saturday, we're going to be talking about. I'm going to be showing you how to utilize and how to be able to properly trade a how to be able to properly trade a a market structure, whether the market is trending or if it's ranging or consolidating. Okay. I'm going to teach you how to utilize it. That's what we're going to talk about next week. So please, I'd like you to once again subscribe, like, and share to your friends. Okay. Now if you have any questions, you can ask in the comment section below, or the link to my Instagram account and my Telegram account is in the description. You can maybe send me a message privately and ask me anything if you're having difficulties. So for now, folks, until next week Saturday, I wish you good luck and good trading.